Morning, 9th of September, 8 o'clock, well, 8:05, morning call. And today is definitely a continuation on from yesterday, because if you saw the videos that I posted yesterday, I had a spectacular day. And today is revving up to be pretty good as well. But why is that? Because there's a lot of movement in the markets. And when I'm saying the markets, on the pound, so we'll be looking at the pound today. And as you can see on this little block, this website, by the way, guys, if you haven't used it before, is called FinViz. Very easy to find. And it gives you an excellent snapshot of what's going on in the markets for the day that you're going to trade. Now, today, we can see the pound is incredibly weak. It's losing ground heavily, and the yen is gaining ground. Superb. Now, I called that 2 weeks ago, and it paid me handsomely yesterday, okay, as did cable. But more on that in a moment. So once you've got a gauge of what is going on using this, you can start breaking down the charts to find a pair that you like. Or alternatively, if you trade a single pair, for argument's sake, you only trade cable, you can get a little bit of a bias from here. And what I mean by bias is not direction, because just because the pound is weak doesn't mean to say it's going down. All it's telling you is there's going to be movement in the market that day, and the best movement is going to be between these two because they're at the outer extremes of each other. But markets do this, all right? So if it's at the bottom extreme, you can think, right, it's been selling off, it's been selling off. Are we coming to the end of that sell-off? Or can I wait for a retracement? And if you're dealing on daily charts, those retracements can be quite big. It just gives you a good roadmap as to which pair to look at. Or if you're looking at a single pair, is there going to be a lot of movement that day, or is it going to be pretty conservative? Because if you look at them two, there's not going to be a lot happening on them because they are of equal strength. So it might be doing this. Now, if you're a range-bound trader, that's great, because you just wait for it to get to the bottom of the range and you watch it bounce. That sort of thing. Okay. So it is a great little block. You get a lot of information just by looking at it. Okay. Flick it over onto the economic calendar, and talking of flicking things over, well, hello, my love. You want to put some clothes on sometime?
Yeah.
You know.
I'm going to work.
You're going to work. Aye, I'll follow in later. Don't worry. Told me off yesterday. You know, I had a spectacular day yesterday. And because I'd pretty much done my job before I'd even decided to go down to the office, I thought, I'll treat myself to another cup of coffee. She royally kicked off because I was 20 minutes late. Cow. Sorry. Calendar. After you've had a look at your block, look at your calendar. There's not a great deal happening till 3 o'clock this afternoon, but this one is going to be interesting. Okay, it's quite a big movement, and I've been watching the US CAD for quite a while, simply because it's been on a royal old sell-off, and I'm waiting to see signs of that stopping. Okay, I'm not trying to pick the bottom. I just want to see when it's going to change, and then I can jump on. It's not a market I trade a lot, but it's been a royal move for quite a long time. And as I keep telling you guys, a market cannot go in a single direction forever. At one point, it has to correct. And if it corrects, you can then watch it to see, well, is this going to be a continuation, or is it going to be a reversal? And these are things you look at. And today's event is one of those market stopping events. So if it's going down, there could be a sentiment change over the next few days with the Canadian dollar. Okay, so keep an eye on that, and we'll look at it in a minute. Now, I looked at my strengths this morning. This is my day trading strengths. I often take it. I have another sheet similar to this, which is based on very high time frames, monthlies, weeklies, etc. But for day trading, I use this one. And it's roughly the same as what I show you on FinViz. It's just me plotting it onto a spreadsheet. And the reason why I put it on a spreadsheet is I can just see the numbers clearly. Don't ask for the calculations. It's not something I give out simply because I used to. Somebody thought it was a trigger and then failed and give me so much hassle, it'll never happen again. Trolleys can suck it. Never mind. Sorry. What we're looking at is I look at which one is the strongest, which one is the weakest, and it corresponds to what you see on FinViz, because basically the mathematics I use behind it is roughly the same as that block. So if you can't work them out yourself, that block will do it for you. I just like to do it this way. So it corresponds pretty much close to where that is. I then look at the change of strength, and for you guys, just look at yesterday's block and compare it to today, and you'll be able to see the change of strength. I put it on here, and I can see that, yes, the yen is gathering pace that way, and the pound is losing pace, -3. So again, it's correlating to what I want, and then I'll just put a little block on this side to see which pairs I'm interested in trading, and it is these three. Okay, simple stuff. It's just a way of filtering down what we're trading, and what I'm interested in is this one. Okay, because that is the strongest, and I'll keep an eye on cable as well. So let's have a look and see what the charts have to offer. Get rid of that. And off topic slightly is the euro dollar. I've pulled the euro dollar up just to show you it because it's the biggest and a lot of guys like to trade it. But for me today, I'm looking at these two. Okay. So what does this picture tell us? Well, you can see it's on a pretty strong sell-off, okay, but it's stalled at this level. This is why you should keep your levels on your chart, all right? And if you look to the left, which you should always do, all right, so on the right-hand side, you have the here and now. On the left, you have your history. And as many people have told you time and time again, history repeats itself. Well, marked a level that is there. You can see it's on a 4 hour, so you know that it's pretty strong. And what has happened when it's come back to that level? It's stalled. All right. So that's a good indicator that something is now going to happen because the eyes of the traders are on this level. So you now have to figure out what is going to happen. Well, when you have a strong sell-off like this, moving averages are a waste of time, all right? Because a moving average will only follow the price, because that's exactly what it is. So any strong move like that, the moving average, so they become irrelevant. Once you're in a trade, a moving average is great for keeping you in the trade, but as a trigger, they are too far behind, all right? They're too lagging, all right? There are strategies out there that work, but they work on high time frames. If you're doing it on low time frames, you get cut to ribbons. But on this one here, what you need to start looking at is what happened. And if you look above, you'll see it's containing within this section here. Now that slammed through, so it's a high possibility that that was going to go to the next level, which it has, but it has stopped dead. All right. There's indecision here because the tails either side are roughly the same, even though it was to the low side, but it respected the level and now it's pushing away. The chances are this is going to go down, but I've got a high probability it's going to come up into this level here where I'm working, which is 796. Before that, it'll revisit the bottoms of this, and again, look over to the left. It's respected that section before. It came down, came away, came to the exact same place, stopped dead. Go further back and you see it's stalled there before, just there and there. Okay, and that wick tail, if you pull that down, is nigh on the same place. So kind of the center ground between these is an indecision area as well. So if you have a theory that you are going down, which I do, I'd be waiting for a retracement to come up, see it get to about here, then make a decision as to whether or not to go short. And if not, and if it's breaking this level, it is definitely going to that one. Okay, so there's some good movements around on the euro, and that's off the 4 hour. And look at your 4 hours, guys. They're a good map. And there you go. This is the hourly. It's had a long old move down. It stopped. That's a good sized candle, giving good indication of movement. Just keep an eye on it. If it closes below, you've got a good opportunity to continue that journey down. But if it gets up to around this area here, where I say 96, which is there, you know, you've got yourself a good 20, 25 pips head start on the market if you can get in at a better price. Okay. So something to keep an eye on. And another good one is look at your pivots. Don't use them as much as I should, but it kind of reinforces my theory that it's going down. The rule of thumb with a pivot is if it opens below the pivot, it'll try and go to S1. If it opens above the pivot, it'll try and go to R1. They're just key levels from the day before. The pivot swap over for me is at midnight London time. Check your own broker as to what their times are, but for me it's midnight London. Okay, and as you can see, it is open below, it's gone up, it's respected the pivot, it's come away. I think it'll probably go back up to respect it and then come back down, but there is target number 1. Okay, now the next two that I'm looking at is, I'm going to quickly glance at this. This paid me royally yesterday, as did the other trade that I told you about 3 weeks ago, which I am still in it. Okay, and that is the New Zealand dollar, and I'll be watching that all of this week, because what I was talking about a couple of weeks ago, yes, it rallied up, but it is now starting to shift, and it is paying me, as you can see there, £1,000 out of it yesterday. Okay, so yesterday did incredibly well. There's another video going up because I've already been on the screens and done the rotational trade of the German DAX, or the German 30, continuation on from yesterday. So that's paid me quite well this morning. And also this market that we're looking at has paid me incredibly well. And these aren't massive position sizes, guys. You're talking like a $5 a position. You know, it's not the land of make believe. You know, where you see these planks where they're saying they're trading sort of £1,000 a point. I wish, you know. I know one person who can trade £1,000 a point, you know, and he's a multi-millionaire, but not multi-millionaire, multi-millionaire. And he twitches when he's trading that size, and he is in and out pretty quick. All right. So when you see these idiots on the land of make believe, what you guys call Instagram, saying they're on £1,000 a point,
you ding dong!
trust me, they're not. You know, you're talking institutional level fund sizes, and no, they're not. You know, I mean, I'm twitching when I'm getting into 40 and 50 quid a point, and that's about as much as I can take. You know, the markets get really scary when you get up that high. You know, don't get me wrong, when it goes in your favor, it pays you very well, but it pays your psyche, and it's, if I went much higher than that, I'd risk my account. All right, and I've got a good size account, but I'm at the outer limits at 60 quid. You know, I'm happy about 20, 25 pound. That's all right. That's doable. And when you're down to £5, it's a breeze. You know, it's another breeze, because it doesn't dent my account that much. Okay, sorry, I digress. Talking of this one, the reason why I like it is I've been in this one for 2.5 weeks. It did go against me. That was my hard area on there. It was a long-term swing. I was expecting it to take a little while to play out. I do have day trades running within it as well to carve off as I'm going, as well as the longer termers. But my target point today is down here. And over the 2 weeks, as you can see, I've targeted 544 pips on this. So it's not a case of hit and run for 10 pips. It was set out to be a long-term trade. Okay. And the other target is way down here. You know, so they are the overall targets. But this is where you have to be a bit careful. I am risk-free on all of this, so even if it comes back and stops me out, it doesn't matter. This money does not exist until I put it into a physical bank account. Up until that point, they're just numbers on a screen, which is why I often trade like this. When I've got big numbers on, I'll take them off the screen. I do not want to see my P&L. And the reason I don't want to see the P&L is I mightn't let the trade play out. You know, if you look at this and you think, okay, that's pretty good, there's a high probability I'm going to get to there, you would leave it alone at £1 a point. You put on your P&L and you start seeing that and this, you'll grab it. And you'll grab it because your FOMO little emotion kicks in. And that is a bad thing in trading, because one, it'll put you into a trade too quick, but it can also get you out of a trade too quick. And you've got to learn to control that. Okay. So I'll just switch these off for now, because I don't want to see it. I want to explain what is going on with this. Now, this here had been in, well, you can see a range, hasn't gone anywhere. I was expecting the range to break down under here, which it has. However, it ran away from me. My overall thesis based off the daily, which is this one here, and if I pull that back, you'll start seeing my entry points and my targets, which were predefined. Okay, so we're entering up here is what I wanted. So anywhere from there to there was my entry point, and then I have my targets predefined, and it was based off this movement, and that movement was February through to March, but it didn't come into play till now. So if you look right back in your charts, because some people ask me, how far do you look back in your charts to get your ideas? How long's a piece of string, guys? You can go back as far as you need to. With gold, at the moment, you've got nowhere to go with it. It's never been up to 20 before. It's in new territory. So in theory, you could go back to the start of the gold market. There is no definition. So I'm kind of staying out of gold at the moment. I just want to see the dust settle, because I've got nothing to gauge it on. But I have been on markets where I've had to go back maybe 10 years to find levels and one thing and another, and just to see where the market's been. Yes, market conditions change, but sometimes you've got to go back that far just to find some key levels. Okay. So with this one, we've watched the drive go up. It had to come to an end at some point, and that is exactly what is happening now. Dropping onto the 4 hour, we can see the sell-off, but there's a great pocket of air here. Okay, this must retrace at some point, so I'm expecting it to bounce back up, but the overall journey I'm holding out to here. All right, if it doesn't get there, it doesn't really matter, because it's royally paid me already. The idea of the trade is being done, but that is what is happening. And all the indicators are assuming that that is going to. Again, the pivot, so there's a target point there, and S2, both within the pocket of air. So the pivot are confining the price as well. And there's no point putting a moving average on it because, well, it's just a falling knife. But I'm already on the trade in the right direction, so you just ride it for as long as it can go. Okay, nice, simple, easy setup. That's just going to be a continuation down to the bottom. Okay, and I can't see any signs of it slowing down. It's even this where it stalled a bit, didn't really stop it. It's on a Murray trip. Okay, and then finally we're looking at cable. Good old cable. He's taking a pounding as well, isn't it? It's had a right sell up. It is now selling down. It is broken these levels. It is bust through a key level. So the next one down is here. So we've got 90 pips, 100 pips maybe of air to move. I'll guarantee this thing has opened up below the pivot. Yep, there's a shocker. And there's your target. Okay, and if you watch me regularly, you'll see that I work on midpoints quite regular. Midpoints are great because the market will always probe. And if you're not rightly sure where it is, the tipping point is the middle. All right, it often is. So when you see a strong directional move, the tipping point is the middle. Now, when you see something like that on a 4 hour, and you'll often see me put a fib on, that has to break to 2 levels to get onto the 50%. All right. So with that, you can wait for it to break here to go up to there to get to that 50%, or in this case, because it's a strong directional move in a single direction, you can wait for the retracement slightly and then look to sell into it again. All right, because you want to be trading with the dominant trend if you can. All right, when you get a bit more experience, then you can start looking to rotate and get both ways. But in the meantime, as you're just starting your careers, etc., or even if you're experienced for that matter, the better way of trading is to trade with the dominant trend. Okay, so find your dominant trend on the high time frame, refine it on a mid time frame just to be certain. Confluence, if you like. So if the high and the mid confirm each other, then move it onto a smaller time frame for entry. Power of 3. Okay. Very, very simple. And that's all trading is. So our next area is here. So you're looking 12,840 roughly, with the first target point on the S1. And again, as I said earlier, it's exactly the same as the euro. The reset point is midnight. Drop it onto an hour so you can see it a little bit more clearly. Yeah, there's your visiting point just here. Okay, you can see it, long tail at the top. It's pushed up, it's rejecting this level, it's pushing down. Yes, there's buyers there, but for it to retrace, it's got to crack a very key level. So the pressure's down. It really is. So this move hasn't quite finished its journey yet by the looks of things. So when I get in the office later on this morning, I'll have a little look at this, and I might put a cheeky little trade on. I've already traded this morning. I've got money banked. I don't really need to do it. But if the conditions are absolutely perfect while I'm doing a bit of housekeeping, I'll consider putting a little trade on. But in the meantime, I'll be managing this one. Okay. So that's it. Nice, easy market. Looks like the pound's on a good old sell-off, possibly for today and tomorrow. And then on Friday, and it's anybody's call on Friday. And we'll see. But be mindful this afternoon at 3 o'clock for the Canadian dollar. So if you're watching the US CAD, in fact, we'll have a look. All right, take this out to a daily. You'll see what I mean. See, that has been on a royal old sell-off. It's hardly looked back at all. The last time it had a big candle like that was here. It stalled for a few days, but then it carried on. Okay, and watching this, it's just trying to see if there's a reversal, and if it is, there's some good meat on the bones, but there's a lot of strong levels it has to get through, because this has been on a royal journey. But as you can see, as you come back, it's currently around this area. It still has some room to get down before it can bottom out. So it's going to be an interesting time, guys. You know, it's still got more room to the downside, but this afternoon might paint a different picture. And if it does, excellent. You know, get a better gauge on this market. So that's that. All right, I'm going to go jump in the shower, get myself brushed up a little bit, enjoy the coffee, and see what today brings. So remember, guys, do what you love, and money will follow. See you all in the next one.